Hello again. The Chinese economy expanded by 6.7% in the last fiscal. That's the slowest growth the country has seen in 27 years. Now it has been downgraded by Moody's, an assessment that Beijing has rejected. But what about China's own companies complaining that they are being spread too thin thanks to the president's pet One Belt, One Road project?
For the first time since 1989, China's credit rating has been cut over fears of slowing growth. Moody's, one of the world's three biggest rating agencies, has dropped China by a notch from A1 to AA3 and changed its outlook for China from stable to negative. It said China's financial strength would erode somewhat over the coming years, with the economy-wide debt continuing to rise as potential growth slows. China's finance ministry has called the assessment an exaggeration of their economic difficulties and an underestimation of reform efforts. The downgrade not only raises the cost of borrowing for Beijing, but also puts the spotlight on its unwieldy foreign policy project. The Belt and Road Initiative has left Chinese state-owned companies very worried. Beijing will spend $122 billion to build roads, railways, ports and pipelines across Asia. State-owned firms will invest in 65 participant nations. Two-thirds of these have debt ratings below investment grade. 71% of the companies say their top worry is the political risk involved. Not surprising given the area Beijing is focusing on. The project includes countries like Afghanistan, Pakistan, Syria, Iraq and Yemen. In 2014, protests over China's oil exploration in South China Sea forced an electronics maker company to withdraw investment from Vietnam. China's $1.5 billion Colombo Port City project remains dogged by demonstrations. Security of staff and assets is another concern. Experts say the project might overexpose state-owned companies abroad when they are already struggling to cut costs and shed soaring debt at home. Over $250 billion in Chinese overseas investments failed between 2005 and 2015, limiting the risk appetite. Unfortunately for them, President Xi's BRI extravaganza earlier this month only highlighted the potential, not the pitfalls of his pet scheme. Bureau Report, WION.
Beijing understandably very upset with the downgrade by Moody's and the way it reflects on the economy in China. But the fears raised by the Chinese state-owned companies are very pertinent. We haven't heard from anyone in the Chinese government, but coming as they do, the expression of these fears with the first downgrade in almost 30 years is reason for worry for China. The agency fears China's financial strength will erode as debts rise. And as we said in our report, Chinese companies have invested over $400 billion outside of China before this One Belt, One Road initiative, and they do not have the appetite, the ability to absorb risks of this dimension anymore. We have with us Arvind Yelleri from the Institute of Chinese Studies joining us from New Delhi. Arvind, has China bitten more than it can chew?
I think yes, what Moody says, because last year also Moody brought out a report called China's Trilemma, and Moody had indicated that China has already reached 40% of national debt, and it is going to create a lot of problems for China. And it is expected that 2017-18 that ratio is going to reach somewhere about 50%, somewhere near to 60%, and that is not really a good figure as far as Chinese economy is concerned. And Moody has been consistently telling Chinese or reporting about China's economy since the last couple of years. If you remember, last year Fitch and S&P also reported negatively about the Chinese economy. I would say that Moody was quite optimistic about Chinese economy since the last couple of years, and this had to happen, but this did not happen last year, and this happened this year. I mean, this is quite obvious. There is something consequential.
Well, let's talk about the One Belt, One Road, and many countries which are linked to China through this project. Many people, many economists there have expressed concerns. They've called it a debt trap. Beijing has dismissed all of that. Do you see the Xi Jinping administration also dismissing fears expressed by the Chinese state-owned companies?
No, Mike, my answer to that would be from 1998, or to be very frank, 1992, when China opened up accepting the capital, foreign capital, and accepting the investments from abroad. It accepted all the ratings given by NRSROs, by Fitch, Moody, S&P, and it was very happy because these credit ratings which was given by these three agencies helped China a lot to accumulate capital, foreign capital. And suddenly when these couple of agencies started giving remarks about Chinese economy and started downgrading or making stable credit ratings as far as Chinese economy is concerned, now you certainly start doubting about what are the real motives behind that, because these credit agencies which have been reporting about Chinese economy 10 years will not change their stand suddenly overnight. So there is certain reason behind it, and the reasons these credit rating agencies are giving, for example, non-performance of capital, the capital plight, and non-performance of Chinese economy, local governments are not able to recover the debts, is more or less the fact which nobody can deny. So yes, there is a reality that there's so much of investment China is trying to put into the Belt and Road Initiative is something which is very astronomical, which is not, I think, realistic.
Right. How important then is OBOR for the Chinese leadership? At what cost will they push ahead? Have they drawn a red line? Beyond this point, we will not stick to this initiative?
They haven't drawn a red line, actually. They're going to wait for a couple of more years. For example, 2019, the second OBOR forum is going to happen in Beijing. And I think they're going to test all their cards, whatever options they have. I think they're going to do all this or test all those things in the next couple of years. Now, there is a rationale behind this thing. China had to take a risk, invest into these projects which they believe that would give some returns to the Chinese economy. I mean, it would try to stabilize the growth which is trying to guide it down. If you look at the present projections of this year, it is going to settle down somewhere about 6.3%, 6.2, 6.3%, and this is not really good for the present leadership. The 19th Party Congress, which is going to happen in the later part of this year, Xi Jinping, who is going to consolidate his power based on all his whatever achievements he has accrued in last 4 years. He doesn't want to let it go that easily. So definitely Xi Jinping and present leadership looks all these investments as a risk, but it's worth taking, a risk worth taking. Otherwise they don't have any other options. If you look at the growth, I mean, they have to take one major step, which would be float such interconnectivity projects, and those are over ambitious. I mean, I really doubt the realistic or the success rate of such projects which have been floated by the Chinese leadership.
The Chinese companies are talking about $250 billion of failed investments overseas in the past 12 years. Does the government have the ability to absorb this kind of losses going forward, because OBOR will mean much more investment and then potentially many more losses as well?
Yeah, very good question. Since last couple of years there has been this argument and counter argument going between the credit rating agencies and the Chinese government, and Chinese government is saying that normally the fiscal deficit, if it is below 3% and if the national debt is about below 60%, it is still acceptable. And in Chinese case, it is below 60% and below 3% of the fiscal deficit, which the Chinese are saying that they are very well able to pay back. And Chinese are very confident that the present situation and the points raised by Moody, Fitch or S&P, they think that those are just hypersensitive. It is not really necessary at this point of time. The Chinese have claimed that there is a political reason behind bringing out these rating questions or so-called standards in the middle of this year. So the Chinese have objected to the credit rating agency's stand very vocally.
Right. Is there a realization in Beijing that this might have turned into a rather unwieldy project, but given the kind of political capital that the government has invested, there is no going back?
No, the Chinese leadership has understood this thing in the last couple of years, because if you see those who are investing in this so-called projects are the state-owned enterprises. The private enterprises' role in these projects are very less, are minimal, and state-owned enterprises are investing just because of the political incentives, and there is no other profits they have. If you look at the cost-benefit analysis of the investments which the Chinese companies are making, especially about the public enterprises, the cost-benefit rationale really doesn't stand anywhere. It is just the political pressure, and the Chinese leadership has really understood that. Also, there are so-called 6 Belt and Road projects, but not all 6 of them are beneficial for China. But the Chinese leadership will not give it up at this stage, because I have given you the political reasons behind it. The Chinese would still take a couple of years, try different ways of implementing it, try testing their luck. But they would not give up these projects for next couple of years. And Chinese, frankly speaking, Chinese would never give up, saying that, okay, we're going to cease investment in these projects, cease investments in this Belt and Road, because that will be completely suicidal for the Chinese leadership, domestically as well as internationally.
Right. Arvind Yelleri, thanks very much for breaking it down for us. And as one forecasting group put it, there was no particular trigger for the move other than the ongoing concerns about the lack of reform momentum in China's financial market. That's how things stand there. We'll keep a close eye on China, the economy, and the Obor project. Of course, we're taking a break. Up next, we'll talk about the big sporting clash in the city of Stockholm.